Hi, my name is David Mandy. I'm president of O&M Partners, and I want to welcome you to the Osisko Development Town Hall call. For those new to these broadcasts, about 6 years ago, O&M recognized that just the sea change in non-deal marketing, investors are receiving information at home that used to just be geared and available for professional investors in conference rooms and big office towers. So it's opened up. I guess you could say the information is much more democratically distributed these days. Osisko Development trades under the symbol ODV, and they're on the TSX Venture. The questions in Q&A are for everyone, and we ask that they can be easily answered by going to the question portal of GoToWebinar, or by emailing us. If any questions remain unanswered, we'll follow up in a timely manner after the call, to answer your questions. For those who dialed in with your phone, you'll be able to hear the presentation as well, so don't worry about that at all. I'll go through. There's not going to be any delay there. It's a real pleasure to introduce you to Sean Rusin. Sean is heading ODV, Osisko Development, and a very well-respected and experienced management team of real mine builders. I mean, this is quite a team, and they've done it before. Sean has over 30 years of experience in the mining industry. As founder, president, and chief executive officer and director of Osisko Mining Corp, he was responsible for developing the plan for the discovery, the financing, as well as development of the Canadian Malartic mine. He also led the efforts to maximize shareholder value in the sale of Osisko Mining, which resulted in the creation of Osisko Royalties. Sean's an active participant in the resource sector, very well known in the industry, and certainly well known to be super knowledgeable, and he's got a no-nonsense style, which everybody, investors really welcome. We also pleased to have Jean-Francois Lamond. He's the Vice President, Investor Relations, who's also on the call with us. So without further ado, I'm going to turn it over to Sean.
We can't hear you, Sean.
But you're muted.
Hopefully that's got it. Can you guys hear me now?
We can.
Can indeed. Again, Sean Rusin, welcome to present.
Sean, can you hear us?
I think he froze. Frozen. Thank you, everyone, for your patience. We'll get started in just a moment.
Sean is offline. He'll be right back on.
Can you hear me now, guys?
Yes, we can.
Okay, perfect.
Your video
thank you very much.
Sorry, Sean, your video is frozen. We might just remove video and do audio only for bandwidth reasons.
Sure.
All right.
Is that better?
I think so.
Thank you, everybody. As everybody fights for bandwidth in the COVID-19 world, that seems to be the new resource scarcity. I want to thank everybody that is online for taking the time to listen to the Osisko Development story. It's the latest chapter in what's been a 20-year voyage since we started with Osisko back in 2000. And obviously, we went through the evolution there of the Canadian Malartic mine, which is now Canada's largest gold mine, and they just found another 18 million ounces there. As David said, we sold that in 2014. Shareholders, that company got sold for 4.3 billion Canadian, about 2.5 billion US at the time, and it was a pretty good lift. We built that mine for about $800 million and sold it for that. If we go through the next slide, please, Scott. Keep going. So we've covered this. We'll move on to the next one, I think, in the sake of time. What I really wanted to do today was give you a bit of a snapshot of this company. We started trading in November. It's about a 750 million Canadian dollar enterprise value. There's quite a bit of cash in this company as well, with almost $200 million in cash and another $110 million of third-party securities that are quite liquid. So a lot of firepower and zero debt. So a pretty kind of an interesting story onto itself. So about $1 billion of NPV of market cap right now, Canadian, or about 750 US, and quite a bit in terms of assets, with the asset base now being over 7 million ounces. Next slide, please. So really, what the point of today's presentation is really just to show you the basic value proposition in here is the Cariboo project located in central British Columbia. This is a historic mine site. It's produced about 4.5 million ounces before we got there, starting in 1860. And the new Santana project that may be a little bit less known, located in Mexico. But the core asset that you're investing in, if you own our stock, is going to be the Cariboo Gold Project, and San Antonio is going to be building value quite quickly here, as it's a heap leach open pit operation we're building in Mexico. Two other assets in the company that we'll probably joint venture out. These are exploration project generator things that we had in inventory. One is all the surrounding real estate around the Guerrero area, including the Torex and Los Feliz mines. And the other is the James Bay mining camp, where Newmont now has Eleanor. We own a lot of the exploration upside there in the package well. But we're going to bear down and focus on our two principal assets here, the Cariboo Gold Project and San Antonio, Mexico. Next slide, please. So in terms of valuations, a few metrics for you on this slide. Again, because there's so much cash on the table and we've already inherited quite a few ounces, this is actually a pretty good metric to look at in terms of our capex. We've added it on. Even at that, we're still trading, sort of at the lower level of where we think this company should trade. And we will have some near-term gold production from test mining that we're doing for you starting in Q2. And then the overall projects that we have in the asset base right now should get us about 275,000 ounces a year for what we have now. So this is going to be stepping out quite boldly as we get into it, and a lot of the capital that we need is available to us as we speak. Next slide, please. This is a metric I do like a lot. It's what do you get for the amount of capital that you put in? So it's an NPV to CapEx ratio. So this shows pretty well for the amount of cash that we have to invest to build these mines. We actually create a significant amount of value, which is one of the metrics that I always look at when we're trying to figure out how to manage and allocate capital. Next slide, please. Some of the other metrics that we've gone through in this deck, and just a who's who in the zoo kind of set of slides here to show you, the size. 7 million ounces is roughly where we are on the gold equivalent resource side. We're at about $350 million for development costs in what we have right now. We'll be doing an updated definitive final feasibility study for late summer. And then you can see where we sit on the life of mine average production. We're up there with a lot of the mid-tiers, and we think that that's going to grow as we get more work done on the feasibility study, and we also get more aggressive on what we're trying to do in San Antonio at Mexico. Next slide, please. So the 1, 2, 3s of the presentation today. Near term is Bonanza Ledge. As said, some test mining there. We've got about 62,000 ounces lined up that we're going to run through a mill that we already own called the QR mill. So that's underway as we speak, and I hope to have a gold bar here fairly early in the second quarter. But it's about 30,000 ounces a year for the next 2 years, and that helps us offset some costs as we go into the bigger mine build, which will be the Cariboo. San Antonio is also in the here and now. We have about 1.2 million tons that we're going to put on a leach pad in Mexico here at the end of the year. And then we'll also be looking to bring that bigger project to bear as we are doing that now. We bought a 15,000 ton a day mill, crushing and screening plant in Nevada that was working for the Britannica mine. And we're in the process of sending that down to increase the scale of intensity there. And then the big one, as I said, the Cariboo, we're going to be out with a feasibility study late next summer. We have 12 drills turning there right now to convert ounces from the inferred category to the feasibility. We've also had some significant discoveries, and there's a lot of drill results coming your way as the labs, as we catch up with the labs right now. We've got about an 8 to 10 week backlog. So you should be starting to see some pretty good rhythm coming out of drill results as we get further into the story. So again, the Bonanza Ledge mine is a starter pack. Cariboo is the big deal, located in central British Columbia, and it's a brownfield site with a lot of infrastructure already in place. Next slide, please. So what we're talking about here is not just a mine, we're talking about an entire camp. We own about 2,000 square kilometers of mineral rights here, all contiguous. There's been about 150 kilometers of underground development on this site. Interestingly enough, this was the first one of the first mining projects that JP Morgan actually invested in back in the late 1800s. So we are known for brownfield camps. We like to go in, re-science them, bring new technology, new ideas, and we've been quite successful at it, having put 80 million ounces together in total, and we built about $10 billion worth of companies, essentially all on brownfield sites. So that's kind of our theme. We do like to go back in and do the exploration that wasn't done, and we're just getting really excited about what's happening on our exploration package here. With the recent financing and the amount of cash that we have in the bank, we've got a lot of drilling to do here, but we feel like we're just at the very beginning. When we started at Malartic, everybody said, oh, there won't be anything there. By the time we sold it, we were at 13 million ounces. The project is now, and we still own the royalty, that project is now just announced another 14 million ounces. So the total there has been 30 million ounces, one of the biggest gold camps in the world. And we're set up to take these big projects on and move them along quite fast. We are known for big drill outs like Osisko Mining. Right now, I think 30 plus rigs turning in Windfall Lake, 12 here. And then we have bigger projects like Horn 5 and other things that are bigger in permitting stage as well. So this is our thing. We like to go into these big camps, redo the geology, redo the engineering, and bring capital intensity and world-class mine building skills to bear on them. Next slide, please. This is the slide that's probably got us the most excited. As you look at these two trends, it's 83 kilometers or about 50 miles of trend there. So it's a big camp. If you put that in context, the entire Abitibi camp in Quebec is less than this, and 50 miles is a lot of real estate to try and cover. The Carlin trend is about 51 miles, and we've been drilling there for I think about 75 years now, and still having discoveries in the Carlin trend. So this one's here to stay for a while. As you see the yellow lines on the bottom, that's all the potential at depth. So we're looking at about 3 miles on this cross section, and out of 50. So we're about 10% down to a depth of about 1,000 feet is what we know about so far. So there's a lot to come on this, but once we get started, the vision here is 5 to 10 underground mines with ramp access up and down this trend, with a central processing facility and advanced mining techniques by using a road header electric machine, and also we're introducing some processing technology through the ore sorter that works particularly well here. So nothing particularly magical, but these technologies are now evolved to the point where they're standard, so we can use them in what we believe is a good investment here. Next slide, please. So this is one of the things I was talking about. This is a new road header from Sandvik, and it replaces an old drill blast technique, and it's fairly automated. It operates with artificial intelligence and algorithms in terms of controlling how it moves and how it mines. And this is a pretty exciting piece of equipment that I think is going to drive some pretty big value here that the last owners that operated this camp back in the 80s didn't have access to. So this makes quite a bit of difference for us. Standard mining techniques on the stoping portion of it. So just, taking what the civil guys have been using in tunneling, and it works really well in our rock here. So a couple of those things are coming to bear. Next slide, please. So, the Cariboo camp, as I said, really this vision is a central processing facility, scientific approach to exploration, systematic, make sure that we understand the mining, get a medium-sized mine up and running, and then keep stepping out. And then, continue to consolidate this area and understand the geology here. We've only drilled down, deepest hole is about 2,000 feet right now, but the mineralization continues at depth, and we've got these new discoveries that probably didn't matter to the old timers because they were too hard to mine. But we're going to be mostly underground in this mine, so we won't have the same challenges that they did in the past. Next slide, please. So we talked a little bit about technology. The mining here is, we've tried to keep it pretty straightforward. We're mining at about 4,000 to 6,000 tons a day. We're using the ore sorter on that material, which really is kind of like the X-ray machine that you use at the airport to X-ray your bag. But with the new algorithms and artificial intelligence and the speed of the CPUs, we're able to sort rock without having to spend a lot of money on it. And it's quite economic. It's less than $2 a ton, whereas if we have to process it, we're closer to $15 to $20 a ton. So it's a pretty big cost savings. And then we're using a standard flotation circuit, which is probably the most used technology within the processing facility, but the idea is not to have to process as much rock as we would have by having this modern XRT technology that we can apply. Next slide, please. So we put these slides in here to give you a bit of a view of the circuit, but for the sake of today, if anybody has any questions in it, I'll come back to it in the Q&A. But we've done a bunch of test work, probably more test work than anybody else on this processing technique in the gold space, and we're ready to, we've got a machine arriving here this summer. So we're full on into pre-construction on the mine site, and we're continuing to de-risk all this stuff through the feasibility study that we'll be delivering this summer. Next slide, please. So we've gone into a couple of these processes, and like I say, I'll save some of this for the Q&A. But we have an existing mill, and we're taking advantage of that to reduce our footprint. So we produce this concentrate that's about 1 ounce a ton, and then we finish it off and turn it into gold doré at the existing QR mill that we own. Next slide, please. So Mexico is a pretty interesting one. It's a project that not many people have heard of. It was originally, it was a copper SXW project that ran from 2012 to 2018. They ran into some difficulties. The founder of the company passed away. We ended up getting the property from a bankruptcy sale, which for those of you who know me, that's I've been known to do pretty well in these things. Geology's turned out to be in our favor, and we're located not too far from Agnico's La India mine and Argonaut's La Colorado, and to the south of us is Santana, the Minerales Brine and Mulatos that Alamos operates. So we're in a pretty good place in Mexico for mining, and we had announced about 50 to 70,000 ounces originally. There's a couple 100,000 ounces of oxide, but there's about 1 million ounces at 1.2 grams. To put that in context, that's about twice the grade of what everybody's mining in Nevada right now. So it's pretty good going, and we're just getting the drills out there now to do some confirmation work. The place was drilled pretty well, but we didn't have access to the historic drill data through verification of the core, so it's been in the inferred category. But we're now moving to do that, and we have permits to go out and run this 1.2 million tons that's already sitting there in the stockpile. So we'll get that underway. That'll give us a good setup, and then we've purchased this 15,000 ton a day plant that we're in the process of preparing for this project. But all in all, it's a pretty big land package too, about 11,000 hectares. And that's something that we're pretty happy with, because it's not easy to get into an old mining camp like this and get any meaningful ground. No real intensity for the exploration done, so we're seeing quite a bit of opportunity as we continue to do the science that we need to further understand the property. We get to the next slide, please. So just to give you an idea, this is the kind of stuff that a mining guy likes. As you can see, really no habitation, previously impacted by historic mining operations. And really our challenge here is to take this Sapuchi Hill, which you can see is elevated, and we're going to process it through crushing and screening, and we're going to put it on the gray leach pad at the bottom of the hill. So nice and simple, and relatively low capex intensity. We think we're going to build this mine for somewhere around 25 to 35 million US to get it to its full potential. So, we're going to see what the drill brings, but right now we have more than enough there. We've got, probably 3 to 4 years of oxide, and then depending on how big we build this, somewhere between 10 and 12 years of overall mining are lined up as we speak. So all in all, it's a pretty good start to the package. And what this does is it gives us a low cost operation while we're waiting to build the bigger mine at the Cariboo in 2023. Next slide, please. In terms of our ESG, which I know is a big topic today, I've been a leader in this space for that around, and the Osisko Group in general. We're known for innovation. We're known for building good and big mines. As Canadian Malartic at the time was 55,000 ton a day open pit. We were pretty innovative there. We came up with ways to encapsulate and remediate 15 previous mines in the area by using the new mine. And that ESG has been translated through, and it's our calling card when we go to see our partners in First Nations. And also it's our calling card when we go to governments to get permitted. Everybody wants to know that you have responsible mining practices these days, and we continue to be committed to the leadership in this space as we get further into it. And I think that it also, at the end of the day, it speeds things up if you have a good calling card and the technical know-how to bring these projects to bear in a very responsible way. Next slide, please. So, that kind of sums up our ESG idea, but I did want to give you a little bit of a historic overview on Wells before we leave. It's quite an interesting place. It was the gold rush that came after the 49ers and on the way to the Yukon. So it happened between 1860 to about 1940 was the boom years. And then it went back into production in the 80s, and then we took it over in 2016. The ownership of the land package was splintered. We've all put it back together. But this is a community that's had 160 years of mining in it. So we're pretty happy to be where we are. If you're going to be in some place in BC, you probably want to choose Wells would be at the top of your list. If you want to build a new mine where an old mine was. So that's kind of where we sit on it. Invite anybody who's in the area that likes to come and visit these things. It's quite a historic town. It has quite a historic set of buildings, as well as the largest 120 person full-time crew on in the summer in character from the 1860s. So we're pretty happy that the BC government's been our host, and our Wet'suwet'en First Nations partners are supportive of getting this project up and running, and we just think that this is the right time for this project. And it's a great project if you want to invest in the future because of so much upside on the exploration side. So that brings us to the end. If you want to go to the next slide, please. So, I think we've covered it off. Pretty simple story in the beginning. $250, $300 million of cash available to go and build this project without going into any debt. About 7 million ounces in total. Lots of upside and lots of places to drill. We don't actually need to do anything else to take this. What I believe it ends up being somewhere around 500,000 ounce a year producer with the projects that are in it now. So that's up to us as management team to get it there. But we certainly got a great start, and it's a relatively brand new company to the market, and it's backed by our Osisko Gold royalties that still own 75% of the stock. So you have some deep pockets along with you as an investor. And we also are part of the larger Osisko group. So you can kind of invest with us a la carte, but this is certainly the one that's got me excited right now. And I put my hand up to take on the CEO roles of this company as we evolve it, because I think it's going to go pretty well as we can move forward. And we got a lot of value creation to put forth here. I'll stop there and take questions.
Thank you, Sean. Great presentation as always. Let's start with Doug Loud. Doug, questions today, thoughts?
Yeah, this is really fascinating. The story just keeps getting better. The mill you have already is already permitted, your slides say, but what would it take to get it permitted to handle more ore if your dreams all came true?
So what we're doing is the QR mill is about 1,000 ton a day mill.
That's the one.
Yeah, so that's up and running. We did some modifications and investment into it, so we're just recommissioning it right now. And then we've bought a 7,500 ton a day circuit that was brand new that we're in the process of permitting to install that directly at the mine site in Wells. So that's where the central processing facility will be. We started that permitting process about 2 years ago. So we're in pretty good shape there, and we expect that we should be construction released sometime in the summer of 2022 is my hope. And we'll have the feasibility study for you this summer, 2021. I think I might have said 2022 in the presentation, but it's actually this summer. And that's the basis for the permit and the construction relief.
That's great. How is Mexico behaving these days?
Sorry, go ahead.
How is Mexico behaving these days? Government behaving?
Everybody's mining and everybody's working. You know, we have the odd sort of flare up of people want to change the tax regime, but we see that in almost every jurisdiction right now. And you know, I think that happens with any valuable asset base that everybody's trying to figure out how they're going to pay the bills. So you know, Sonora state has always been a mining friendly state, and I don't really think that it's going to change. But you know, it's like every jurisdiction. There's an interest in you know, how much of the pie each partner gets. But so far we've had pretty good cooperation. We operated here in the past, and the guy that's our country manager, Barry Quizox, he did a lot of our stuff in the Osisko 1 days. So we have a pretty seasoned team, and the agreements that we actually have in the land package is actually mine permits already. So what we're doing is changing it from copper to gold.
Oh, okay, like gold. Okay, thank you very much. Sounds great.
We'll try and send you a picture of a few gold bars.
Love doré bars.
We've been known to pour a few or two.
Thank you, Doug. Let's go to Glenn. Glenn Oldick. Glenn, question today for Sean? You're unmuted, Glenn.
Can you hear us, Glenn? Maybe not.
Okay, let's go to Howie. Howie, any questions today?
I have a few. In Mexico, what do you guess your mining and processing costs per ton might be?
So we're looking at open pit. There's 2 phases to the open pit. The first one is the oxides, which are basically free dig. And then, so there won't be too much drill blast on that. There's probably about 200,000 or 300,000 ounces there. And, you know, we should be probably around $10 a ton to $12 a ton by the time we mine it and stack it. You know, we just were involved in the Victoria gold mine up in the Yukon. We're mining there at 30,000 tons a day, open pit in the Arctic, and we're running around $14 a ton all in there. So we're pretty sure these costs will hang together. And we were able to buy the equipment right. We bought a 15,000 ton a day crushing and screening circuit that if I had to buy it tomorrow, it'd probably cost me 25 million US. I bought it for 3.9 million. It's 2014 equipment. So, you know, I think we've taken a lot of the risk off the table on this one. The other good thing about Mexico is you got lots of contract miners, so you don't have to capitalize equipment if you don't want to. And then, it'll be a pretty simple truck and shovel operation for the first 3 years for sure. So it's, I think we're going to be the low cost mine, somewhere around the $750 US all in. But it's pretty standard, heap bleach. It's not, there's nothing exotic here.
Now, the dollars you cited were Canadian or American?
American.
Okay. And is there sulfide below the 300,000 or 400,000 ounces?
Yeah, that's what I'm excited to drill. Most of the drill holes only go down to about 120 meters or about 400 feet. So we haven't really drilled below that, but the sulfides that were tested all reached at about 65%, and we were getting 80% recoveries in the oxide component. So that sulfide component is going to be pretty exciting.
What would the cost be on the sulfide?
The sulfide, we should be somewhere around $15 a ton by the time we crush it and screen it. We hope that we can stay in the oxide as long as we can, but it shouldn't be much more than that at this point.
Is there any possibility you could use Alkalox, or does that not apply?
Well, we're going to do the test work. We always do, but it's always pretty specific whether that stuff works or not. And I don't know if we can, I don't know if I want to hang my hat on it until I get through the oxide and I can get down and start do some bulk pads and maybe do some test work on some bulk pads.
Is the Alkalox is what used in copper, if I understand it correctly, or is that different?
Well, it's used as an oxidation product, really. So it depends on what you're trying to do. If you have sulfides in it, it doesn't matter whether it's gold or copper. You're just trying to get that oxidation reaction going, right?
Yeah.
So you can use it wherever you need to oxidize sulfides. And I have limited experience with it personally. We've used straight sulfide cyanide technologies.
You broke up. You broke up. Please say it again.
I said we haven't done a project with it yet.
Okay.
We've done test work on it in other scenarios and decided not to. But we'll definitely do the work and decide whether it works or not.
You decided not to because you want to do the oxide first. Is that correct?
Well, we didn't. If you want to do that ox, you got to kind of take a larger bulk sample, like 50,000 tons, and put it on a pad.
I see.
How it works. Like you can't really do it from drill core with too much assurance yet. So, but we've got, we got to get this mine up and running, and we've got basically 3 years of oxide to get sorted first, and we'll have time to do that work along the way. But it's definitely on our list.
I like that circuit you bought for about $3.25 million when it might have cost you 20 or 25. Why didn't you buy a dozen?
Well, I'm always cognizant of we get into these cycles, and equipment's tightening up now. And all the good stuff will be gone first, and then it gets pretty ratty. So I've been at this game a long time. So when I see a piece of gear that I like come up, I'm pretty fast.
All right. Thanks, Sean. Keep going.
Thank you, Howie. Is Marshall Barrow on the line with us? Marshall? Or Dr. Wood?
We do have Dr. Wood here. 1 second. Can you hear us, Dr. Wood?
Yes, I can hear you. Can you hear me?
We can.
Good. Mr. Rusin, you had mentioned earlier that you might be interested in acquisitions of more land surrounding your Cariboo project. I believe the trend runs northwest to southeast, kind of a diagonal. What is your mine life of the Barkerville mine currently, and what other companies own the lands adjacent to you that you might be interested in?
If you look at where we are, we have probably about 20 years of drilling to do. We have about 7 million ounces, 6.2 million ounces drilled off, of which we're drilling right now to put 3 million ounces in the current mine plan. So in the near term, we're probably more likely just to finish drilling out our own lands, and let some other people invest in the less known stuff. We've drilled about 6,000 meters here, 600,000 meters here, about 1.8 million feet. So we've got pretty good working knowledge of what's there, and we just need to chase down the, for lack of a better term, the food that's in front of us before we go out hunting again.
Okay.
But it certainly, if somebody does some work and comes up with something, we're going to be pretty keen to do that, and we're encouraging a bunch of juniors to do that, and wherever we can help, we will, because we got to get the money into the ground if we're going to have those discoveries, right? So.
Right. No, that's very impressive. Just very impressive.
It's a big project. So if
Thank
we drilled 100,000 meters a year in scout drilling, which is not on our known ground, we figure it's about 22 years to drill the targets that are on them.
Oh my, that's a long time.
If I'm still doing it, I guess either something went wrong or something went right. But
Yeah, that's right. Thank you.
all right, thank you very much.
Okay, we're going to turn to Rolf Wagner, please. Rolf, are you with us?
This is Glenn Older. Can you hear me?
Yeah, Glenn, terrific. Yeah, please.
Sean, I've actually been on your site in British Columbia, and I have a video of a gold pour.
Oh, there you go.
I don't think anybody is understanding how big this site is, and you don't have to go anywhere else. My question is, with all the Osisko companies, and I'm a shareholder of all three, you've raised a ton of money in the last little while, and dilution is a concern. My question to you is, you personally are in all three companies. How would you rate your percentage ownership in all three companies as to your total net worth? The reason being is you don't judge a man by what he says, you judge a man by what he does.
Yeah, I mean, my biggest investment in the portfolio is Osisko Gold Royalties. I started that company the day after I sold Osisko Mining 1. So, about half my personal wealth or better has been in that company. And, we did a lot of work. We incubated a lot of value there. And I share your concern on dilution, but I also know what it takes to build a mine. So it's always a fine line to find that right balance of when do you invest and what pricing do you take dilution at if you need equity. And as you know, we also in the royalty and streaming business. So, I live on that mine finance side of the ledger. It's nice to find a good deposit. It's not so nice to lose it through dilution. So, that's the kind of the approach that I take, is try and find that balance, and that by being able to bring lower cost capital to bear, like the royalty and streaming on when the equity markets are tough, that's a great way to finance. If the equity markets are open, we'd rather do that. And capital intensity in the mining industry is gone up. And the slide I showed you guys earlier in the deck was one that I look a lot, is like, how much capital do we have to put out, and what's the multiple of NPV that we're getting for each dollar that goes into the ground. So that's always the tough one. But I put my name out in front of this one because I have a particular passion for Barkerville. As you said, most people don't realize how big this thing is. And I'm 57, so I wanted to build one more big one. The royalty company is in great hands with Sandeep Singh, and he's doing a great job. And he's a ex-investment banker, so he's a better banker than I am. But I've still got my whole band with me. They built Canada's largest gold mine, and we think that this is going to be a pretty important project.
I don't think the market understands that you did a fair amount of drilling before you took Barkerville over. So you had a pretty idea what you're looking at here. But I think you'll be mining here at Barkerville when you and I aren't around.
Well, that's what I think. Like I say, if I'm the one that's drilling in 22 years, that'll be a great outcome. But I don't think we'll be done with drilling in 22 years here. So.
I totally agree. Thank you.
It's one of the bigger sites left out there that, kind of was due to land ownership and fractured ownership. It never got put together by a group like ours that could go in and raise the money and do the drilling, I always said Markerville was one of those projects. If you went there with $10 million, you wrote a pretty bad country song. You needed to go there with a couple $100 million and sort it out. So.
Glenn, thanks for your questions. They were really good. Great answers from Sean. Let's turn to Rolf Wagner. Rolf, you're unmuted. Do you have a question today? Okay, let's turn to Steve Shipman. Stephen. It's a little delay in unmuting. He'll be with us in a moment.
Oh, yeah, sorry about that, David. Thank you, Sean. David, I have a few questions, and that doesn't even involve Sean's distilleries. So I'll ask one, and if you have time at the end, if you want to circle back, that's fine. You handle it the way you want.
Sure.
Sean, I need to go a little bit back in time. I too, myself and my investors are holders of all your entities. I had originally thought and had written down that this project was going to be one part of royalties attempt to doing development as well as royalties, and that you were going to take in some PE money, which I think you did from Ontario. And now I find it spun out. There's nothing wrong with that, but I'm just trying to figure out what the history and the chronology and the thinking was about avoiding that plan or eliminating that plan of having royalty become a developer as well as a royalty company.
Well, I think, it's a great question. And, I'm primarily a developer, and the royalty business is a really good business. And, but what we found is after we brought Barkerville onto the balance sheet, there was a lot of generalist investors didn't like that business model as much as we thought they would. And then, of course, the pandemic came along, and gold went for a rip from 1,300 to 2,000, and we found that we just weren't being able to get the shareholders at OR across the line and daylighting that value. So we decided to spin it back out, but it really was a function of that, that rise in gold price, because I was pretty focused on the private equity side. But as you know, private equity money is not cheap either. So we thought that backed by popular demand, if you will, that we would put this project out. The other thing that came along is we got the San Antonio project. And between the two of them, we said, well, the big knock on Barkerville was it was going to be, fairly big CapEx, probably about 350 million US. And it was going to take 5 years to get it to where it had to be. So we really needed a project that went in the short term, which is the San Antonio, Mexico project. And then, we spent almost 2 years, just putting BC Vein, that smaller mine, back together. So now we have something that's no longer that far away, right? It's, we'll be producing gold in the second quarter at the BC Vein, which is the Bonanza Ledge area. Sorry, we got too many names on this thing. And then, we'll have this great heap leach mine in Mexico that's, you can get up and running in a year for relatively low CapEx. So I looked at that and said, well, there's not too many companies in the public market that are like that. We're probably not going to get paid for it in OR at this point. So we went out and canvassed some of the shareholders, and, we went out in the initial raise with 140 million Canadian. So about $100 million. So we had shareholder support for it. That's how we went forward. That's a bit of a long answer, but 2019, when we bought this company, was a different world.
No, I that's fair enough. I just wanted to put the pieces of the puzzle together. David, can I ask another question?
You sure can, Stephen. We're toward the end of the call, so you can go as many questions as you want.
Thank you. Sean, I'm intrigued by the new digging technology that you obviously are enthusiastic about, and the new AI innovations. Can you give us layman an understanding or an explanation of why you're willing to take a chance on this new technology and what it was in your due diligence process that convinced you that this is going to be a game changer in the district?
Yeah, we'll go back to a bit of science here. This deposit is hosted in the Jurassic aged rocks, which is relatively young rocks, and they're not as hard as what we see in a lot of the other mining camps. You know, in the Canadian mining camps, they typically are in the older, more silicified rocks, and this technology, yeah, it would work, but it wouldn't be as cost effective. And what I'm looking for here is 40% faster development per heading in the underground and 25% cost savings. And I'm also looking to diminish the number of explosives that I have to introduce into the contact water because we, you know, as the world changes, ammonium nitrate explosives are becoming more expensive because we have to manage them in the contact water environment, not just as an explosive. You know, so all those things add up to, if we want a good ESG on this mine, we have to look at these technologies. Reduce chemical, increase the consumption of electrical power as opposed to diesel, and also to limit the amount of contact water that we need to process and release. So I hope I covered it off. The other thing is the equipment has changed a lot. You know, the first one of these we bought was about 8 years ago, and it worked pretty well, but we couldn't figure out the ground control. We had to back it up all the time. That problem's since been solved. So it's an advancement on technology. It's the faster computing speeds allow, especially the ore sorter, to do things that we couldn't do with it before. And this new machine, you know, it was new technology a while ago. Now it's pretty tried and true, and we're working with Sandvik right now. So we got the benefit of other people's investment in R&D. We're bringing it to bear on this project, and the rock type, the fact that the gold is all associated with the sulfides. Makes it really kind of the best I've seen so far. We've done a bunch of different projects with ore sorters. This is the best one we've seen. And the road header, this is the first time we've had rock that was really, you know, this was the right machine for this rock. So I hope I answered the question. But
It did. I'm wondering if you saw both of these different technologies in actual use around the globe before actually getting the stuff for yourself.
yeah, the ore sorter has been around a long time. You know, it kind of goes back to the original ore sorter was hand cobbing, where people would just dump rock out on a bench or on a conveyor belt, and you know, whoever was there, the men, women, and children who weren't working in the underground sorted ore, right? So the idea of taking, you know, some sort of either optical or X-ray and getting rid of the rock before you have to pay the energy to crush and grind it has been around for some time, but we just didn't have the necessary computing speed to be able to do it in an efficient way. So we have seen it all over the place. It's used a lot in more and more gold mines are doing it. I would say that every major gold mining company right now is testing. But we've had one since 2016, I think it is. So we ran it, and we had a road header as well. So I'll tip my hat off to Tommy Obradovich and the Sprott guys that were there on that as well. But the evolution of all this equipment, it's changing all the time. And the benefits of managing contact water in a mine weren't really an economic consideration, say 15 years ago. Now, you know, whatever drop of water you manage, you have to figure out how to save costs on it. So I think that's driving it as well.
Got it. Thank you for the detailed discussion. And I'm waiting for your potato vodka to develop sometime in the future.
Yeah, fortunately, I don't have any hands-on management of that. I'm just a shareholder.
Thanks, Stephen. They were great questions. Let's turn to Scott Edmonds. Scott's got a few questions from our audience.
Yes, I do. First question is, Sean, great and concise presentation. The QR mill, it says, is scalable. Is the current 1,000 tons per day is the current amount 1,000 tons per day, or does it allow production scale?
So the QR mill was built by Kinross back in the 90s. It was rated at 1,000 tons a day. That will change a little bit with depending on what rock hardness you put into it. But the main project, and that's why we said, you know, Bonanza Ledge QR, because we're just going to truck that material directly to that existing mill. But the larger project, which we're looking to permit and is under development right now, is a flotation circuit with the ore sorter that we're building and we're permitting, and that will be between 4,000 and 6,000 tons a day. So the scalability will happen at the Wells site, and then we'll convert the QR mill to just a concentrate finishing mill to take advantage of the permits, the tailings ponds, and the infrastructure that's already there, rather than impacting another site.
Thank you.
I don't know if that helped. It's a little confusing, and I've tried to frame it up better, and I take any comments about how to communicate that easier. But basically, we have 2 mill sites, one that's up and running and one we're permitting.
Great, thank you. Another question is, will putting Cariboo into production require any additional funding beyond the income from the 2 mines that will precede it?
At current gold prices, I'm hoping it won't. You know, we'll finish the feasibility and give you that this summer, and then we'll work on the project financing. But, you know, we're in pretty good shape right now with the cash that's in the bank. And if we can get these 2 projects to do what we hope we do, we will significantly reduce any further capital that's required if we can operate them, you know, while we're doing this.
Thank you. And the final question I have from the audience is, have you closed the $30 million financing?
So have I closed the $30 million financing?
Yeah, that's
Yes.
the question. Yep, you have, okay, great.
Yeah, everything's closed up from all of our financings that were out there. Yeah, we've received funds, they're in the bank, and total raise was 250 million Canadian.
So that's the questions we have. If anybody has any further questions, feel free to send them in to us and we'll get them to Sean and team and get them answered for you.
Scott, did we ask Michael Potter for his questions? He usually has some very good ones.
Oh, is Michael on the call?
Yeah, he's on now.
Michael, can you hear us? You have to unmute yourself.
I've only just come on. The time difference confused me. Yes, the question I've got is that, but it may have been answered, I don't know yet, is that at Cariboo, on page 15, it seems that the mineralization occurs in a sort of swarm of vertical pipes. What sort of density of drilling do you need in that situation to define your indicated and measured resources?
So we're drilling at about 25 meter centers right now for reserve level. And that, you know, we go back and tighten up if we have to. But we model these things in vein corridors. So instead of trying to model them, you know, too precisely, this vein goes there and that vein goes there, we try to use more of a wireframe that's akin to a 2.2 meter or bigger mining block. And then the average would be about 25 meters per block to convert that into stope. And then, you know, we may need more work if we have to figure out how much lateral development we need to get there. But we're a long ways into it. We kind of feel like we've kind of tamed the beast on that front. And hopefully, you know, the goal is to deliver 3 million ounces in the mine plan with the full feasibility by the end of summer.
Okay, so you're using 25 meters to get you measured resources, is that correct?
That's correct, measured and indicated, yeah.
Okay.
But it changes, like the shaft zone is quite a bit wider. So, you know, there's a lot of ounces in that shaft zone, and that system is up to 30 meters wide and about 300 meters of strike length. So we'll drill more in there just because we want to start there. And the grade, the in situ grade of the veins there before you put it into a larger calculation is about 12 grams. So it's quite good, and it reacts very well to the ore sorter. So, you know, these things do have some variability to them, but the interesting thing is all the sulfide in the quartz is pretty consistently between 10 and 12 grams throughout the whole deposit. Then it depends on width of the vein and the amount of dilution that you're taking.
Yeah, that's what struck me about the ore sorting, is the actual mineralized ground must be sort of 9 grams a ton plus, and then you're just throwing the mixed in with sort of 50% waste, which you're then picking out.
Well, very astute of you to pick it off, because we've tried to simplify the explanation, but these high grade vein systems, if you simplify them too much, they don't make any sense. But we look at it really just from an ore and a waste standpoint at the end of the day in terms of our mine stope design, and then we put the sensitivities into the mining model to see whether the cost to get over there to take those ounces justifies going to get them. Because if you've already got development into an area or you've had to go buy a vein, it becomes economic. And if you have to reach too far, the biggest challenge here again is the lateral development. And that's why I'm so keen on this road header technology, because horizontal development costs are really what makes the difference between this being a great mine and it being a company maker.
Yeah, understood. And one other question. If you add up all these sort of exploration areas you've got, and that, if it comes up to something like 20,000 square kilometers, how do you propose to actually work your way through that?
It's 2,000 square kilometers.
Yeah, I'm including Guerrero and the other areas as well.
As I say, like Guerrero and James Bay, we're probably going to farm those out to exploration companies. I don't want to focus on on greenfield exploration right now until we finish these two mines.
Okay.
More intensity will go to near surface targets at Barkerville that we can include in the next sort of 5 to 10 year mine life and give us scalability at Barkerville. I mean, ideally, I'd like to get to 10,000 tons a day at Barkerville, and I've organized the infrastructure and the engineering that way, so that we can scale if we believe is what happens, and we end up with a half a dozen to 10 underground mines that are all ramp access up and down that main trend. And then once we're underground, we can do cheaper exploration at depth, but it really is the near surface there. And then at San Antonio, we have the drilling that was done before, but it was only down to 120 meters. So the sulfides go, way deeper than that. But the last company didn't have the time for that, and they were bootstrapping an SXW copper mine, so they didn't really do the kind of exploration that we would do. And if you know anything about us, we like to drill first and ask questions later.
Okay,
Our
that makes
policy is called SUDS, which
sense. Thanks very much.
Yeah, I was gonna say our internal policy is called SUDS, which stands for Shut Up and Drill Stupid.
Okay, there we go.
I also remember, Sean, you saying something to the effect that if we're going to fail, we're going to fail early. Some of these mining companies have a tendency to just hold on to things forever, right?
Well, as I said to a lot of people, I know a lot of geologists that like to look at their rocks and their maps, but I'd rather be a good driller than a good geologist.
Well put. We see Dr. Woods on the call now. So just go circle back to James. Do you have a question?
He already asked it, but let's see if he has a further.
Okay, just so we covered him, that's all.
Mm-hmm. 1 second.
Okay, I think it's been a very informative call. We will produce the replay for this call within about 3 hours, and then generally about double the audience comes on through replay. And we certainly welcome everyone on the call. If you have anyone that's interested, you please feel free to forward the replay. I'll turn the call back to you, Sean, for closing remarks.
No, thank you, everybody. Good luck with your investments, and we'll be coming to you with pretty good rhythm of drill results and hopefully some gold bars to look at as well. So exciting times in the house of Osisko. Thanks for your support.
Thank you, Sean. All the best, and I wish everyone a very pleasant evening. And we'll go from there. All the best to you. Bye-bye.